Good evening, friends, and welcome. I welcome you all to today's session. And before we begin, welcome Pankaj ji and welcome Srinivas Joshi ji. Before we begin the session and we hand over to the speaker and the moderator, our Central Council member Srinivas Joshi ji is amongst us, and he would like to give us some few updates about the institute's activities and developments in relation to Form 3CD. So I would request Joshi sir to kindly please update the members.
Yeah, good afternoon. Thank you, Vijay Kamalramanaji, for giving me this opportunity to speak here in this August gathering. Friends, every year we await this season of tax audit but for last several years that form had never changed, and we had to probably whenever we were attending such seminars on tax audit, they were becoming more routine. Except someone like Pankaj Shah ji creates some interest for us for every year for something new in the same form. But fortunately, with institute has been telling government that we need to change this, and with whatever this thing. I mean, and in this tax audit season, we wanted extension. Even institute applied for extension, and fortunately, we have got. In fact, there is a request to institute for further extension. I hope such a request has come to your association of tax practitioners also, and probably everybody wants it to go to March, but I don't know whether we'll succeed in this. But at least a month or so extension will continuously try. This is update number one. Another thing is that there are these new clauses whenever government comes out with a form. We always through Supreme Court has been told to government that this has to come much earlier. It never comes earlier. This year also at least three questions, 8, 18, and 32, which need section 115 to be commented there, has come new, and it has come quite late, and profession is virtually not ready because of COVID here. But still, we are trying to give some guidance. Another update here, therefore, from the institute is that the guidance note on audit, tax audit, which was actually written several years back. We have requested direct tax committee to rewrite it, but I don't know, almost now the season for tax audit is almost to end, suppose assuming that we file it by January. I mean December itself we have to finalize. So whether it will come out by that time, but they are trying their best to see that it comes out with all new guidance, or at least new guidance, or at least the guidance on new clauses would come. But we have asked for all the guidance note to be redrafted in the current situation. So that's another update, and it will come, I hope, that very fast. Next is, of course, I will like to tell you about the Tax Audit Quality Review Board. I don't know how many of you have heard of it. This is the new board made 2 years back. It has started working. We are reviewing the tax audit reports of various listed companies, like we are reviewing in FRRB, Financial Reporting Review Board, the reports, financial statements of listed companies. Here we are reviewing the tax audit report of listed companies. This particular board, Tax Audit Quality Review Board, will also review GST reports that whenever that they are available to us from right from 18 audits which have already been filed. But this particular this particular board has done two things. One is it has issued a checklist on documentation regarding tax audit. It is available on the website of ICI. This gives us several things. This particular regarding tax audit, this particular document tells us about what should be in current file and what should be in permanent file as far as tax audit report is concerned, which is based on a relevant standard on auditing. Secondly, it actually gives an excellent guidance as to what we should do before we actually write an answer to every question on that. The third thing it does is that it has been vetted by direct tax committee, all the checklists, so that you can depend on that it is properly vetted and done. Next thing I'd like to tell you about this whole list is that whenever any declaration or management representation is required about a particular clause, it has been stated in the checklist on the right hand side that this clause needs a management representation or a declaration. And last thing I'll tell you about this is that the sample reports are also available. You fill up whenever you fill up anything which is not yes or no, or not actually the positive answer, it has been given there. So with all that, I think this checklist is extremely useful. I will request all of you to go to ICI website and download it. Otherwise, of course, our good friend Sabu will make a link of it and send it to all of us, all the members here, or send it to Vijay. He will in turn send it in his own group. Now, coming to the last thing I'd like to tell you about this tax audit quality review board, that they are coming out with a common errors found in tax audit as a publication. This publication, they already have something on their website, but it will come as a publication in times to come. And this publication will tell us the difference between qualification and notes. Many people give it in notes, but which is actually a qualification. Or it will also tell us which books of accounts are actually prescribed. We just write something there which we should avoid. Or it will tell us how that keeping the ICDS column blank. The many times we found even in listed company the column is kept blank without any comment whether there is anything required to be adjusted, or the figures are given without any reconciliation. About this particular new form, the institute is making a representation saying many places actually a reconciliation is required between financial statement and a figure given there, because otherwise it's impossible to know whether the figure is right. So with this, I think I hope that institute succeeds in this. With this, I will thank all of you once again and request the coordinators to start with the introduction of Pankaj Shah, sir. Thank you. Thanks a lot, friends.
Thank you, Joshi sir. Thank you for the updates. Now I would request our moderator Beria ji to kindly take over. Sharad Beria ji, all yours.
Welcome to all members. Today's webinar is on issues in tax audit and clause-wise analysis of Form 3CD, which is organized by Tax Practitioner Association Thane, Tax Friends Association Mumbai, Income Tax Bar Association Prayagraj, GST Bar Association Varanasi, Association of Tax Practitioners Vellore, Bhiwandi Tax Practitioners Association Bhiwandi, Legal Relief Society Kolkata, Baroda Tax Bar Association Vadodara. Today we have a speaker, C. Pankaj Shah, a senior chartered accountant, qualified company secretary, and qualified insolvency professional. He is also bachelor in law, bachelor in business administration, diploma in information system audit. He is also pursuing PhD in taxation. He was the chairman of Indore branch for 2019-20 of ICI. He is also on the advisory board of School of Commerce, Devi Ahilya University, Indore. He is a board member of Tax Bar at Tribunal. He is a prolific author on taxation and a national speaker in seminars and conferences. He is regularly representing before ITA, BIFR, Settlement Commission, and other authorities. His opinions and articles are published in daily leading newspapers. Sir, there are a number of issues in tax audit, which some I have noted, which I have received from some members also. Number one is, can tax audit report be revised? Is signature of SSC should be obtained on the tax audit report? If there is a vehicle registered in the name of director or a partner, can the company or firm claim the depreciation? The common issue is business exceeding 1 crore or 5 crore, business under section 4480 AE triple B. Also, some issues are if anyone does future and options, and if he makes a loss more than if his turnover is more than 1 crore and makes a loss, whether he's subject to tax audit. I think so. C. Pankaj will be taking all the issues, and clause-wise, I hand over to C. Pankaj Shah. Thank you.
Thank you, Sharad Bhai. And at the outset, I'm thankful to Vijay Keval Ramani ji to give me opportunity to speak on so many forums first time. There are plethora of forums and a huge audience in these times to which I am opportune to address today. First of all, my regards to Srinivas Joshi ji, Kamlesh Sabu ji for giving their expert views at the outset on tax audit. Tax audit is nothing new for us, but it is a unique feature in the whole world. You know, India is the only country which has an exclusive audit mechanism for a taxation regime. So if you call for a tax audit, a compulsory tax audit every year, if it is to happen, it is only in India. In no other country, there is a compulsory tax audit which has to happen every year. So tax audit since 1985, when it has come, it is a major work area of our fraternity, chartered accountants. Also, all the tax practitioners, they are also benefited by tax audit because this is a kind of a self scrutiny. There is a self assessment, and tax audit is a self scrutiny because tax audit contains so many clauses now. It is like doing the whole income tax act. I always advise my students, articles who are working at my office, that you do one tax audit thoroughly. You read the tax audit and understand the form 3CD, and 80% of your direct tax paper in CA final gets complete. Such is the importance of tax audit report because it covers not only business profession. Earlier, tax audit was made only for business profession, but now with its ambit expanding, it now covers income from other sources, items which are part of income from capital gains, and all others. So tax audit ambit is expanding day by day, and so is our responsibility. So let me start with my presentation first. Yeah, I hope it is visible to all of you. This
Yes, it's
tax audit,
visible.
yeah. Today, I'll focus more on practical approach to tax audit because tax audit is something which we all have been doing from years, since years. And now we need to understand the critical aspects. Like, for example, Sharad ji has given 6 queries to me. Most of them are already covered in my presentation. So we will go and discuss them one by one. So first of all, practical approach to tax audit, I always make an attempt to start my presentation with this slide. Do you know why we have a monopoly of doing tax audit? Why chartered accountants are having a monopoly? Because there was a case in Supreme Court where one gentleman went to Supreme Court that what is the need to give monopoly to chartered accountant for doing tax audit. So it is not that we are the experts in taxation only. It is because of our expertise in auditing. Supreme Court said that chartered accountants, by reason of their training, have a special aptitude in the matter of audits, and no other person can be held eligible to conduct audit under Section 44AB. They also gave a remark that CAs are a class by themselves, and CAs are the brand for auditing themselves. So, with these words, I would say a great confidence has been reposed on us. So, with this great confidence which is reposed on us, with great power comes great responsibility. So, we have been conferred with a great responsibility by the Supreme Court of India by upholding our monopoly of audits. But one thing which we must remember, it most of the time happens that when we are doing tax audits, audit takes a back seat and taxation comes in front. Taxation takes the main chair, which should not happen. What is audit? That is most important thing. We always see from the aspect of income tax कि ये अलावेबल है, ये अलावेबल नहीं है, ये इसका इंटरेस्ट का अगर आपने खर्चा नहीं किया तो इसका प्रोविजन करने की जरूरत नहीं है, 43B में अलावेबल नहीं होगा, blah blah blah. So we don't think it or see it from auditor's perspective. We always get biased because of income tax क्योंकि audit का scrutiny होता नहीं है. Scrutiny always income tax का होता था, तो वो हम उस एंगल से देखने लग गए थे. Audit perspective से we stopped looking to see. But now, since there is a tax audit quality review board of institute, which has done a wonderful exercise, they have reviewed thousands of reports, tax audit reports, and they have also come out with a presentation. The tax audit quality review board has come out with a presentation of what are the common mistakes which are being done by our members in audit reports. I have also tried to cover those aspects where we are making mistakes. That is very important because certain items we are inadvertently making some mistakes. And since we are the masters of auditing, we are not expected to make any mistake. So therefore, those aspects will also be covered. So at the outset, we should always remember the Supreme Court finding that they have so much confidence and reliance on us that we should leave no stone unturned in ensuring the highest quality of audits, which is very much important. I'm going to cover some practical aspects also, that how we can improve our audit quality and ensure that we stand to the Supreme Court ruling. Now, as I said, tax audit is firstly an audit. It is firstly an audit. What is audit? Audit is systematic independent examination of financial statement to give an opinion on trueness and fairness thereof. So this is very important. Your balance sheet, profit and loss account, your financial should give a true and fair view, which is very important part of your audit. Once I came across with a question, young gentleman said to me कि सर हमारा असेसी जो है वो एनपी हो गया है, उसने इंटरेस्ट का कोई प्रोविजन नहीं किया है, और प्रोविजन करता भी सर तो 43B में डिसअलाउ हो जाता, तो इसलिए टैक्स ऑडिट ही कर रहा था, उसको कंपनी ऑडिट एप्लीकेबल नहीं था. ही वाज अ पार्टनरशिप फर्म और प्रोप्राइटर, कंपनी ऑडिट एप्लीकेबल नहीं था, स्टैट्यूटरी ऑडिट, तो हम टैक्स ऑडिट कर रहे थे, तो हमने इंटरेस्ट का प्रोविजन ही नहीं किया क्योंकि 43B में डिसअलाउ ही नहीं हो रहा था, तो इसका कुछ फर्क पड़ेगा क्या? He was so casual, he was thinking that इनकम टैक्स स्क्रूटनी के अंदर अगर मैंने क्लेम ही नहीं किया खर्चा तो डिसअलाउंस का सवाल नहीं है, तो इनकम टैक्स से मुझे कोई इश्यू नहीं है. आई हैड टू रिमाइंड हिम दैट ही इज एन ऑडिटर. अगर आपने इंटरेस्ट का प्रोविजन नहीं किया, भले ही वो पेमेंट नहीं किया, तो योर प्रॉफिट एंड लॉस अकाउंट, योर प्रॉफिट इज ओवरस्टेटेड एंड योर लायबिलिटी इज अंडरस्टेटेड. भले ही आपका असेसी एनपीए हो गया हो, पर जो आपकी कॉन्ट्रेक्चुअल लायबिलिटी है, बैंक उसे प्रोवाइड करे ना करे, बैंक रिकॉग्नाइज डायरेक्टली करे ना करे, आपको उसको इंटरेस्ट को रिकॉग्नाइज करना है एज योर कॉस्ट, बिकॉज इट इज अ कॉन्ट्रेक्चुअल लायबिलिटी. सो प्रॉफिट एंड लॉस ऐसे अंडरस्टेट ओवरस्टेट हो सकता है. देयरफॉर वी ऑलवेज नीड टू कीप इन माइंड कि ऑडिट में हमें हमारी प्रायोरिटी होना चाहिए देखना कि ऑल द इनकम is recorded, all the expenditure has been booked, periodical matching has been done. This is very important. So income tax में क्या allowable है, क्या allowable नहीं है, वो 3CD का पार्ट है. 3CD हमारा ऑडिट रिपोर्ट नहीं है, 3CA 3CB is our audit report. So this is very important. अब ये ऑडिट इतना इंपॉर्टेंट क्यों है? दैट इज बिकॉज टैक्स ऑडिट, नॉर्मली जो ऑडिट रिपोर्ट किसी स्टैट्यूट के लिए होती है, किसी स्पेसिफिक पर्पस के लिए होती है, they are specific purpose financial statements. Fortunately, unfortunately, tax audit should also have been a specific purpose financial statement. तो बहुत कुछ हमारा responsibility कम हो जाता. But due to a council, central council decision of ICI, which is in 1994, I recall. So because of that decision, it is held to be a general purpose financial statement. So tax audit report is a general purpose financial statement. It is not limited to the tax purposes, since it is having a wide ramification. All the stakeholders, whether it is banker, supplier, creditors, your customers, debtors, employees, everybody would rely, everybody is equally concerned with the report, which is though issued under section 44AB of the Income Tax Act. So it is not limited to Income Tax Act, it has wide ramifications, and we need to ensure the trueness and fairness. Now coming again, it is word fairness, it is not word correct. So this shows us that there should not be any material misstatement in the financials. Small trivial errors may be there, but our focus should always be on materiality. That is very important thing. Then the fundamental accounting assumptions like going concern, historical cost, prudence, materiality are equally there. Keep in mind, going concern will have a very strong implication in this year's audit. I have seen, you also must have seen, I am in Indore, I have seen various restaurants which were there before March are now closed. Many new restaurants are opening, but the old restaurants which were there are now closing. They have been shut down. Why? Because of COVID lockdown. There were huge costs which those entities could not meet, and they have now failed. And because of which, so you need to see that if any proprietor is there and he comes out to you with a business which is now closed, so the going concern has affected. So if the entity is not a going concern, that is a very material indicator, very important consideration for your audit, because जब going concern खत्म हो जाता है तो आपको assets liabilities को fair value पे measure करना पड़ता है. It is not at historical cost or fair market value. It is always at fair market value. तो going concern अगर खत्म हो रहा है तो be it income tax, be it GST, सबके अंदर उसका significant impact आता है. जब किसी का गोइंग कंसर्न खत्म हो जाता है तो आपको उसके इन्वेंट्री को फेयर मार्केट वैल्यू पे वैल्यूएशन करना पड़ता है एज पर आईसीडीएस. सो इट इज वेरी इंपॉर्टेंट, एंड दिस ईयर बिकॉज गोइंग कंसर्न हैज बीन severely impacted in many cases, so we need to keep in mind this kind of considerations also. One more very important practical aspect which I have been observing, our client is also, since they are doing business, and business is something which involves great energy, great mental, physical. हमारा जैसे कोई अच्छा दुकानदार रहता है तो वो माल बहुत आसानी से बेच देता है, तो वो दे नो हाउ टू प्ले विद द साइकोलॉजी. जब हमारे ऑफिस से आर्टिकल्स ऑडिट करने जाते हैं, सो दे प्ले विद द साइकोलॉजी ऑफ दैट आर्टिकल्स आल्सो. इट इज सीन, कभी कोई अच्छा स्मार्ट दिखा उसको प्रेस कर देंगे, किसी कोई ज्यादा क्वेश्चन पूछ रहा है तो उसको बिलिटिल करेंगे कि अरे इतना क्वेश्चन क्यों पूछ रहा है, ये तो बहुत सिंपल है, वो उसको डिप्रेस करने की कोशिश करेंगे. So we also need to do an orientation of our articles before they start the tax audit. We all will agree that 80% work in the tax audit is performed, all the physical work, clerical work is done by our article staff, and remaining 20% work of supervision of reviewing is being done by the member, the principal. Maximum work is done by the article staff which verifies each and everything. So please ensure that before your staff goes to audit, they are given an orientation, and that orientation must be a technical orientation as well as a psychological orientation. They need to be taught that what are the tactics, tricks of trades by the client. He will also try to influence you. There must be some things which he may be hiding from you. So you should know how to approach the auditee and how you should extract the information from that auditee. That is also a very important consideration. So with these basic things, we should also be aware of SA 700, which is our standard on auditing. See, we are given a monopoly to do audit because we are masters of auditing. And it is not about the Income Tax Act we must be aware of. It is the standards of auditing which we must be aware of first. And SA 700, which is on forming of opinion and reporting on financial statement, this is equally applicable on tax audit. So there are two aspects. First is the responsibility of the auditee. The assessee's responsibility is important. What is the responsibility of assessee? That must be clearly mentioned. My presentation would be circulated, so I would not repeat or take much time on this. But the primary responsibility of preparation of financial statement always lies with the assessee, with the management of the company. So this must be mentioned in the tax audit report, form number 3CA 3CB. So this is the assessee's responsibility. And then what is the responsibility of auditor is also required to be mentioned. So this is a standard para of tax auditor's responsibility. The tax auditor is not a bloodhound, or he is a watchdog. He has to verify on test check basis. He has to apply comparative techniques. He has to apply all the audit tools and form an opinion that yes, there is a true and fair view, or whether give a disclaimer, or that this does not give a true and fair view. So this opinion has to be formed, and the basis of conclusion, the basis on the basis of which this opinion is formed, must be mentioned in this paras. So every time your staff goes for an audit, first make him read these two standard paras. So these are the SA 700 responsibility of the management and tax auditor. Before we start with the audit, there are some things which we should do to start with. always obtain an engagement letter from the auditee. Now laws are changing, things are changing. Earlier वो प्रैक्टिस था कि ठीक है ऑडिट हो जाएगा, फीस आ जाएगी. ऐसा नहीं है, चीजें बदल रही हैं. इफ यू सी वैल्यूएशन रजिस्टर्ड वैल्यूअर कब आ गया है, उसमें कोड ऑफ एथिक्स में दे हैव कोड कि जब तक आप फीस वही ले सकते हो जो आपके रिटर्न एग्रीमेंट में लिखी है. देयर कैन नॉट बी ओरल डिस्कशन ऑन फीस और ओरल डिसीजन के बीच पे आप फीस ले लो. दैट इज नॉट देयर नाउ. अब आपको सर्विस देने के पहले देयर हैज टू बी अ रिटर्न एग्रीमेंट, एंड वो रिटर्न एग्रीमेंट में जो फीस लिखी है वही आप ले सकते हो. आपके फंक्शंस क्या है, आपकी रिस्पॉन्सिबिलिटीज क्या है, एवरीथिंग नाउ शुड बी डॉक्यूमेंटेड इन दिस एंगेजमेंट लेटर. So we must try to take an engagement letter every time we start the tax audit. Engagement letter, एक management representation letter, ये कुछ set of documents हमें अपने उसमें रखना चाहिए, क्योंकि जब अब tax audit quality review board आ गया है, कभी भी वो हमसे कोई document मांगेगा और हमारे पास में नहीं मिला, तो then we may face some problem. So we should always ensure that we are having these documents, engagement letter. Then आजकल गाइडेंस नोट, जैसा जोशी जी ने बोला, इट इज गोइंग टू रिवाइज, बट जो पुराना गाइडेंस नोट भी है, हम लोगों का अपना ऑफिस का ग्रुप होगा. वी शुड सर्कुलेट दैट गाइडेंस नोट ऑन दैट ऑफिस ग्रुप आल्सो. इट इज अ स्मॉल पीडीएफ फाइल, एंड एवरी टाइम अवर आर्टिकल और स्टाफ हैज सम other question, he should be asked to refer that guidance note for any clause. Our guidance notes are very exhaustive, very detailed. Maximum answers we will get from our guidance note only. How to approach an item for disclosure, our guidance note will guide. So guidance note का अपना बहुत बड़ा importance है, which cannot be undermined. So every time जब भी ऑडिट होता है, गाइडेंस नोट पे ओरिएंटेशन का हमारा वर्कशॉप होना चाहिए. 10 आर्टिकल्स है तो उनको बोल दें कि आप लोग क्लॉजेस बांट लो और ऑडिट पे जाने के पहले एक फुल डे वर्कशॉप कर लो. क्या होता है, जब भी लड़ाई पे जाते हैं तो हमें अपने अस्त्र शस्त्र तैयार होने चाहिए. सो व्हेन वी हैव दिस गाइडेंस नोट, इट इज अवर बिगेस्ट वेपन. देन गाइडेंस नोट के बाद बारी आती है क्रॉस चेकिंग की. जब भी हम देख रहे हैं तो वी नीड टू बी स्केप्टिकल. हमारा जो सीए का एम्बलम है दैट इज ईगल. सो ईगल इज वेरी शार्प एट लुकिंग. तो हमें भी क्रॉस चेकिंग करना चाहिए ताकि कहीं कोई गलती ना हो जाए. वी शुड सी, क्योंकि कई बार कई आइटम्स कॉमन होते हैं, कई जगह डिस्क्लोज होते हैं. तो नोट्स टू अकाउंट्स, कारो, जो रिपोर्ट्स हैं, फॉर्म 26 एएस है, ये सब चीजों को क्रॉस चेक करना बहुत इंपॉर्टेंट है. इनसे जब हम फिगर्स क्रॉस चेक करेंगे तो कहीं भी अगर कोई डिसबैलेंस हो रहा होगा वो हमें डायरेक्टली पता चल जाएगा. दैट विल गिव अस इंपॉर्टेंट हिंट्स. जैसे हम बात करें कि अगर एड्रेस की बात है एसएससी का, तो उसका एनुअल रिपोर्ट में अलग एड्रेस लिखा हुआ है और टैक्स ऑडिट में अलग एड्रेस लिखा हुआ है. दैट शुड नॉट बी डन. इसके अलावा पर्सनल एक्सपेंसेस, तो इनकम टैक्स में डिसअलाउंस हो गया असेसमेंट में, तो हम 10% एक्सपेंस पर्सनल खर्चा बता रहे हैं और कारों में लिख रहे हैं नो पर्सनल एक्सपेंस. जैसा कॉन्ट्राडिक्शन नहीं होना चाहिए. देन कंपैरेटिव एनालिसिस इज समथिंग वेरी इंपॉर्टेंट. अपने हर आर्टिकल को बोल दें कि भैया आप लास्ट ईयर का और इस साल का पहले कंपैरेटिव एनालिसिस कर दो. मैक्सिमम डेविएशन अगर उसको पकड़ में आ गई, आपका ऑडिट का एक बड़ा पार्ट वहां पर हो जाता है. दिस इज ऑल्सो सब्सटेंटिव टूल ऑफ ऑडिटिंग. कंपैरेटिव कर लो, उसके आंसर्स क्लाइंट से मांग लो, तो उसमें कई चीजें आपकी क्लियर हो जाएगी. क्योंकि इनकम टैक्स डिपार्टमेंट भी जो स्क्रूटनीज कर रहा है, उनके भी डेटा माइनिंग टूल्स में कंपैरेटिव एनालिसिस इज वेरी इंपॉर्टेंट. This is something, before they do it, we should do it, and we should have the reasons for any kind of deviation or differences. So that is very important. कई आइटम्स एसएससी के अगर इंडिविजुअल है या पार्टनरशिप है, तो कई आइटम्स ऐसे होते हैं जो बैलेंस शीट पीएनएल में नहीं आते, वो कैपिटल के थ्रू रूट हो जाते हैं, स्पेशली प्रोप्राइटरशिप में. तो एक हैबिट ये भी होना चाहिए कि कैपिटल अकाउंट की स्क्रूटनी स्पेसिफिकली करे. Our articles should look for major credit, something exceptional, क्योंकि वो ना बैलेंस शीट पीएनएल में आ रही है, सीधे कैपिटल के थ्रू आ रही है. तो दैट शुड बी स्पेसिफिकली लुक्ड अपॉन. डॉक्यूमेंटेशन के लिए श्रीनिवास जोशी जी ने बताया कि नाउ इंस्टीट्यूट हैज कम आउट विद डॉक्यूमेंटेशन की मास्टर फाइल में क्या रहेगा और इसमें क्या रहेगा आपका करंट फाइल में. तो दैट इज ऑल्सो वेरी इंपॉर्टेंट. नाउ टैक्स ऑडिट क्वालिटी रिव्यू बोर्ड इज फॉर्म. सो इससे हमें बहुत कुछ आइडिया मिलेगा. नाउ देयर इज समवन who will be overviewing what we are doing. टैक्स ऑडिट में क्या रिपोर्टिंग हो रही है, क्या नहीं हो रही, क्योंकि टैक्स ऑडिट के अंदर कई गलतियां हमारा स्टाफ से भी होते आया है. कई बार तो एक आई स्टार्ट विद अ जोक हियर, एक आर्टिकल को उसका प्रिंसिपल ने बोला एक काम कर, ये ईयर एक एक साल आगे बढ़ा दे, असेसमेंट ईयर 11-12 था तो इसको 12-13 कर दे, जहां जहां ईयर्स हैं वो सब चेंज करके लेके आ जाए लास्ट ईयर का, बाकी ज्यादा कुछ है नहीं। वो आर्टिकल ऑडिट रिपोर्ट लेके आया, वो ऑडिट रिपोर्ट देख के सीए ने माथा पीट लिया, क्योंकि उसके स्टार्टिंग में लिखा था फॉर्म नंबर 3CD अंडर द इनकम टैक्स रूल्स अंडर द इनकम टैक्स एक्ट। अब वो उसने बोला था साल बढ़ा देने का, तो इनकम टैक्स एक्ट 1961 को उसने कर दिया 1962, क्योंकि उसको बोल दिया था कि एक एक साल बढ़ा के ले आना। तो इस तरीके की जो कट कॉपी पेस्ट वगैरह होता है, दिस इज नॉट एडवाइजेबल एंड दिस कैन रियली ब्रिंग ब्लंडर्स। सो टैक्स ऑडिट रिव्यू बोर्ड अब आ गया है, तो वी नीड टू बी मोर कॉशियस इन एंश्योरिंग द हायर ऑडिट क्वालिटी। तो ये स्टार्टिंग के लिए हमें होना चाहिए। अब जब भी हम ऑडिट पे जा रहे हैं, तो ऑडिट पे जाने के पहले एक मेल क्लाइंट को भेजें कि बॉस प्लीज प्रोवाइड अस दीज थिंग्स। अभी कोविड टाइम की वजह से सिंस everywhere there is a kind of the workings are halted, everybody is working from home. So what we should ask from client, what is the bare minimum requirement we should have? So form 26AS, which is very important, this will help us to know reconcile our revenue. कई बार कुछ एंटिटीज में, जैसा अभी मैंने कुछ सूरत के केसेस देखे, सरप्राइजिंगली सूरत के कुछ केसेस के अंदर एसएससी का जीएसटी में 6 करोड़ का टर्नओवर है, और यहाँ पर एसएससी 4 करोड़ का टर्नओवर दिखाते हैं, कई सारे आइटम्स को इधर उधर कर दिया। ये सब चीजें 26AS से पकड़ में आती हैं। और अब तो फॉर्म 26AS में जीएसटी का टर्नओवर भी आपको रिफ्लेक्ट होने लगा है। सो दिस इज वेरी इंपॉर्टेंट। 26AS ये सबसे पहले माना चाहिए। उसके बाद बैलेंस कंफर्मेशन, वी ऑल नो द इंपॉर्टेंस ऑफ बैलेंस कंफर्मेशंस। सत्यम का पूरा स्कैम ही बैलेंस कंफर्मेशंस के ऊपर था। सो दिस इज इंपॉर्टेंट। बैलेंस कंफर्मेशन केवल बैंक बैलेंसेस के नहीं, डेटर क्रेडिटर्स के भी जो टॉप 10 आइटम्स है एटलीस्ट उनके ले लें हम। कई बार ये होता है कि अरे बड़ा आइटम है, छोटा आइटम है, तो सबका कैसे करेंगे? तो मेजर आइटम्स का तो होना चाहिए। हमने पढ़ा है कि इट इज अ ट्रू एंड फेयर व्यू। सो फेयर, देयर इज नो मटेरियल मिसस्टेटमेंट। सो एटलीस्ट जो भी मटेरियल आइटम्स हैं उनका बैलेंस कंफर्मेशन हमारे पास में होना ही चाहिए। देन बैंक रिकंसिलेशन। बैंक रिकंसिलेशन इज अ वेरी इंपॉर्टेंट आइटम। कई लोग कई सारे पेमेंट बता दिया हमने और वो बैंक रिको के अंदर खड़ा हुआ है। इस तरीके के कई सारे फ्रॉड बैंक रिको के थ्रू भी पकड़ाते हैं। तो ये कुछ ऐसे आइटम्स हैं जो ऑडिट शुरू होने के पहले ही हम मंगा लें, तो आपका 50% इंपॉर्टेंट वर्क यहीं पे हो जाएगा। कंपनी के क्या प्रोस्पेक्ट्स हैं, कंपनी क्या कर रही है, तो बोर्ड मीटिंग इज ऑल्सो वेरी इंपॉर्टेंट। तो बोर्ड मीटिंग की कॉपीज मांग लें। एक स्टॉक स्टेटमेंट सबमिटेड टू बैंक इज वेरी इंपॉर्टेंट, क्योंकि अब क्या हो गया है कि देयर इज अ थर्ड पार्टी अथॉरिटी विच इज monitoring the bank's stock statement given to bank. They are comparing it with income tax and all other statutes, GST also. तो ये स्टॉक स्टेटमेंट अपने आप में बहुत इंपॉर्टेंट हो गया है। हमको कुछ और स्टॉक की डिटेल दी, बैंक में कुछ और स्टॉक स्टेटमेंट दिया, दिस इज क्रिएटिंग ग्रेट प्रॉब्लम्स। तो हमें पहले ही इसको मांग लेना है। अगर एसएससी हमको ये नहीं देता बैंक वाला, तो एटलीस्ट आगे कुछ होता है फ्रॉड, तो वी कैन से कि सी वी हैव आस्क्ड फॉर इट एंड द एसएससी हैज नॉट प्रोवाइडेड। अगर वो नहीं दे रहा तो आप लास्ट में लिख दें कि अगर आपने बैंक में सबमिट नहीं किया तो आप ये बता दें। एटलीस्ट वी विल नॉट बी अंडर द फॉल्ट कि बैंक में ये स्टेटमेंट दे रखा है, इधर अलग दे रखा है। अच्छा, कई बार स्टेटमेंट आप सर्टिफाई करते हैं, तो अगर दोनों स्टेटमेंट आपसे सर्टिफाई कर रहे हैं तो वी शुड हैव अ रिकॉर्ड। तो इसलिए बैंक के जो स्टॉक स्टेटमेंट सबमिट किया है, दे शुड बी सेम एज द स्टॉक डिटेल्स गिवन टू अस। इनकम टैक्स का असेसमेंट ऑर्डर्स, दे आर वेरी इंपॉर्टेंट। सेल्स टैक्स में कुछ असेसमेंट हुआ है, वो हमारे पास में होना चाहिए। कंप्यूटेशन ऑफ इनकम, आरओसी के पास में जो एनुअल रिटर्न फाइल किया है वो। सो ऑल दिस थिंग वी शुड बी कॉलिंग एट द फर्स्ट इंस्टेंस ओनली। ऑडिट शुरू करने के पहले ये चीज होना, ये दीज थिंग्स आर वेरी इंपॉर्टेंट, और हमें ऑडिट का डायरेक्शन, ऑडिट प्लान बनाने में ये हेल्प करेंगी। देन जैसा हमने देखा कि 3CA 3CB, these are the most important part। हम सबसे कम ध्यान इस पे देते हैं, 3CD पे मैक्सिमम टाइम देते हैं, बट 3CD is not our baby। 3CA 3CB are most important for us because that is our audit report। 3CA 3CB के अंदर 3CA है तो it relies on another audit report, और उसमें केवल 3CD से रिलेटेड ऑब्जर्वेशन देना है हमें। सॉरी। 3CB की जहां तक बात है, 3CB इज ए इंडिपेंडेंट ऑडिट रिपोर्ट, तो 3CB का अपने आप में बहुत ज्यादा इंपॉर्टेंस है। 3CB होगा तो वहां पर डिस्क्लेमर, एडवर्स, क्वालिफिकेशन, ये सब चीजें उसमें आएगी। हम लोगों को 3CB में मेंशन करना पड़ेगा what has been the audit approach we have followed, what were the limitation, कि अब जैसे 43 और 269 में अकाउंट पे चेक था कि नहीं, वी आर नॉट एबल टू वेरीफाई इट। जो हमारे गाइडेंस नोट में स्टैंडर्ड डिस्क्लेमर्स दे रखे हैं, वी शुड प्रोवाइड देम। कुछ इंपॉर्टेंट क्वालिफिकेशंस हैं, दे मस्ट बी इन 3CA 3CB, उसको नोट्स टू अकाउंट्स के अंदर लिखने से कोई फर्क नहीं पड़ता। जोशी जी ने बताया अभी स्टार्टिंग में भी कि दे आर कमिंग, इंस्टीट्यूट इज आल्सो कमिंग आउट विद दिस गाइडेंस। अब एक क्वेरी जो मुझे शरद जी ने भी रेज की थी, 3CA 3CB is our audit report, so they must be signed by the auditor only, but 3CD की जहां तक बात है, 3CD is first to be signed by the assessee. Assessee is filling that information and we are just verifying that it has been correctly filled or not. So 3CA 3CB must be filed, signed only by the auditor, and 3CD must be signed by the assessee also. अब यहाँ पर one very important aspect which I will raise, 3CD जब साइन होता है, 3CD के साथ में जो फाइनेंशियल साइन होते हैं, कई बार मतलब आई एम सॉरी टू से कुछ केसेस ऐसे देखने में भी आए हैं कि केवल ऑडिटर की साइन है, पार्टी की साइन रहती नहीं है, असेसी की साइन रहती नहीं है। दिस इज नॉट एट ऑल एक्सेप्टेबल। 3CD and the enclosed account financials must be signed by the assessee, and where there is a partnership form, I would insist that it is signed by all the partners, and company may be the majority of directors, and agar limited people are signing in company, so there is a board resolution, if the MD is signing then it is fine। क्योंकि क्या हो रहा है, एक पार्टनर ने साइन किया, दूसरे ने नहीं किया, और वो दूसरा, दोनों पार्टनर के आपस के झगड़े में द चार्टर्ड अकाउंटेंट ऑडिटर इज मेड एन एस्केप बोर्ड, वो हमारे अगेंस्ट में डीसी में फाइल कर देते हैं, डिसिप्लिनरी एक्शन के लिए फाइल कर देते हैं। और जहां माशाल्लाह केवल ऑडिटर ने साइन किया हुआ है, असेसी ने साइन नहीं किया, वहां पर तो डिसिप्लिनरी एक्शन के अंदर इट इज वेरी डिफिकल्ट टू डिफेंड कि आपने साइन किया ही नहीं। अब हम क्या बताएं कि असेसी ने हमको साइन वाली कॉपी दी और एक हमारी साइन वाली कॉपी असेसी के पास में है। So this is not correct approach. All the partners must sign it to the best extent possible. कंपनी में भी बोर्ड रेजोल्यूशन ले लें हम कि who has been authorized to sign. एटलीस्ट इससे ये होगा कि उनके झगड़ों में हमको ना फंसा पाए वो। That is very important part. So जहां तक पॉसिबल हो सारे पार्टनर्स की साइन हो, so that is always best approach. इसके बाद management representation is also very important. We must obtain a management representation at the time of audit, क्योंकि कई ऐसे aspects हैं जिसमें we have a limitation. Audit also is subjected to inherent limitations. So auditor कई aspect हो सकता है ना देख सके, तो इसलिए it is always better and advisable to have this. Then now moving ahead to some notes which are required this time. अभी ऑडिट जो हुआ, कई ऑडिट्स के अंदर लिमिटेशंस आज भी हैं बिकॉज ऑफ कोविड। वी आर नॉट एबल टू परफॉर्म सम ऑडिट प्रोसीजर। फिजिकल वेरिफिकेशन कई जगह नहीं हो पाया है, फिजिकल वेरिफिकेशन करना मुश्किल है, कई सारे एस्पेक्ट्स हैं जिस पे अभी हम कमेंट नहीं कर सकते। तो व्हाट आई हैव डन, आई हैव टेकन सम लिस्टेड कंपनी रिपोर्ट्स, और उन लिस्टेड कंपनी के रिपोर्ट्स में जो कोविड बेस्ड, क्योंकि वो लॉकडाउन पीरियड के अंदर ही वो ऑडिट कंप्लीट हुए थे, तो कुछ स्पेसिफिक नोट्स इस बार होने चाहिए। लेट अस सी टैक्स ऑडिट रिपोर्ट में भी क्या कोविड से रिलेटेड नोट्स होने चाहिए, क्योंकि इस बार इंस्टीट्यूट का भी फोकस रहेगा कि इन जो अप्रैल मई में साइन हुई रिपोर्ट्स हैं उनमें क्या नोट्स दिए हुए हैं, क्या ऑडिट प्रोसीजर्स के लिमिटेशन मेंशन किए हैं नहीं किए हैं। क्योंकि व्हाट यू नीड टू डू इज यू नीड टू असेस द इम्पैक्ट ऑफ कोविड पेंडेमिक on the auditee. What is the how business model? How is it? Does it cease to be a going concern or not? Assets में कुछ impairment तो नहीं हो गया? Inventory verification कैसे हुआ है? Force majeure clause कहीं पे invoke हुआ है नहीं हुआ है? अगर आपके customers ने force majeure को invoke कर दिया है, then also there is significant risk on your revenue and assets. रिकवरी भी ऑफ रिसीवेबल्स के लिए क्या है, क्रेडिट रिस्क क्या है, ऑल दिस थिंग्स आर वेरी इंपॉर्टेंट। ये असेसमेंट करके इसका इम्पैक्ट आपको आपके ऑडिट रिपोर्ट में देना है। कुछ generic notes which I have mentioned here, you can see them. Like, due to COVID break globally in India, the company's management has made initial assessment of likely adverse impact and believes that the impact is only short term in nature. Management does not see any medium to long term risk. So this kind of representation must be taken from the auditee, and these should be mentioned in the financials, so that it is clear that yes, an assessment has been done by the management and we are relying on that assessment, because such kind of assessment can be done by the management only, and we have gone through, and this is what is done. So there is a proper disclosure about the initial assessment of COVID, because going concern is a very important consideration which will be has to be taken into account. Then some material, where there is a material uncertainty that may be mentioned in the notes to accounts, and we can draw the attention about that note in the auditor's report. So we draw attention to note number so and so, dealing with the uncertainty. We can describe it, and these events or conditions along with the other method indicate that there is a material uncertainty that exists and may cast significant doubt on company's ability to continue as a going concern. So our opinion is not modified in respect of this matter. So what we are trying to say, that there is a clean report, but still we will invite, and this is an important key audit matter. So we invite the attention, because the lockdown was imposed on 23rd March itself, and so it is not event occurring after the balance sheet date. The event were already existing in on 31st March, which is the reporting date. So these are very important consideration which we must take into account. Wherever we were unable to do the stock take, we must mention. Now, coming to the core audit report, tax audit report, we all know 3CA and 3CB. 3CA is not an audit report. It is just a report on the observations of 3CD. So if there are certain observations of 3CD, we need to consider them and we need to report in form number 3CA. But if independent audit report is concerned, there are two clauses. 3CA, 3CB contains clause number 3, where we will mention the audit limitations or audit qualifications, and para 5, where it will be 3CD observations. If you see in 3CA, there is only one para 3, which will contain 3CD observations. So as regards the audit observation is concerned, it is required to be given only in 3CB and not in 3CA, because 3CA will rely upon the audit observations given in the statutory audit report or any other audit report which is given. Then our 3CA or 3CB in para number 5 gives us some categories. I have there are some 16-17 qualifications which are given. So I have divided it in 4 categories. If you see it here, these are 17 things. If you mention in some important things, for example, if you start books of accounts related. So if you select the qualification number 1 and mention your notes against it, that proper books of accounts to enable reporting in 3CD have not been maintained, this thing or all the information which were required have not been provided, or if it is inventory related, proper stock records are not maintained by the assessee. If you give this kind of qualification against or any observation against them, please be sure that this kind of qualifications can call for a best judgment assessment of the assessee. Because if you are, the auditor is himself reporting that proper books are not maintained or so and so, then the case to be defended would be very difficult. It is better instead you don't do the audit if this kind of qualifications are required to be given. A penalty of 1.5 lakh is not much, but if this kind of qualification is given, it is 100% sure that the case will be selected for scrutiny and the books of accounts will be rejected, or you may call for a special audit under 142A. So these kind of qualification, which category we select, maybe we are just giving a disclaimer, but if we are giving a disclaimer under this major head, this can be very risky, especially in this faceless regime. These were the extreme qualifications. Then there are some moderate that we cannot verify personal expenses or TDS return cannot be verified. These are fine. We can give our comments against this. These are of moderate nature. And then there are some technical like 14A or MSME. So there we are required to give disclaimers. We can give specific disclaimers, no issues in this. Then moving ahead, and if you feel that you don't want to give any of those, if you are having something which is different than this, then there is a last column. If you see, the last item here is others. So you give any observation or note or anything you want to give under this others head, that is most appropriate, and that would be that would suffice our responsibility of reporting. So now moving to form number 3CD. 3CD has assumed a great importance after amendment in 143(1). पहले क्या होता था, ऑडिट रिपोर्ट में हमने कुछ डिस्क्वालीफाई कर दिया एंड रिटर्न के अंदर असेसी उसको ऑफर नहीं करता था बिकॉज इट वाज अ डिस्प्यूटेड आइटम. बोथ वर फाइन. We have done our reporting and client has not got that disallowed, but now things are changed with this auto population and 143(1) amendment. अभी अगर आपने ऑडिट रिपोर्ट में कुछ लिख दिया है और रिटर्न में उसको डिसअलाउ नहीं किया तो इट इज 100% श्योर कि वो 143(1) के अंदर एडजस्टमेंट उसका होके आ जाएगा, विच इज वेरी रिस्कियर प्रपोजिशन. 143(1) के अंदर अगर वो एडजस्टमेंट होके आ जाता है तो जैसे एम्प्लॉय कॉन्ट्रीब्यूशन टू प्रोविडेंट फंड, वी ऑल हैव सीन कि हम लोग तो डीले लिख देते हैं जो भी एक्चुअल है और ऑटोमेटिक 143(1) के अंदर वो एम्प्लॉय कॉन्ट्रीब्यूशन का डिसअलाउंस होके आ जाता है, irrespective of the fact that now there are several high court decisions except in the state of Gujarat and some south states like Andhra Pradesh or Telangana where there are divergent views. Otherwise, all the high courts have almost taken the view of alum extrusion, which say that employees' contribution is paid by the due date of filing of return. It is still allowable thing. So these kind of disallowances are automatically getting under 143(1). And as we have first discussed, 3CD is not our baby, वो client का baby है. So 3CD में अगर हम कुछ भी लिखते हैं और client का disallowance हो रहा है तो client may not agree to it और तब bottleneck हो जाएगा. So in those situations कहीं भी अगर ऐसा हो रहा है तो 3CD के अंदर उसका रिपोर्टिंग नहीं किया तो we can report it under 3CA 3CB. We can say जैसे आगे we are going to discuss about cash payments made for electricity payment, for example. If an electricity bill of 15,000 has been made in cash and that is considered as disallowable because it is more than 10,000, it is government company, is not government, so though there is no exception. तो अगर वहां पे हमने वो आइटम मेंशन किया, रिटर्न में ऑफर नहीं किया तो ऑटोमेटिक डिसअलाउ हो जाएगा. And assessee will not allow us to report it under the clause 20, which requires 40A3 disallowance. So what we can do, because of this, a great problem is now getting created. So we can report in 3CA or 3CB that with regard to clause number 20B, payments made to electricity companies, which are government companies, above rupees 10,000 are not considered as disallowable by the assessee, and based on the legal views taken, total amount of payments is so and so. So when we reported under 3CA or 3CB, assessee का जो disallowance हो रहा था directly automatic disallowance, at least that will not happen, because now the thing is that system does not understand everything. 143(1) के अंदर जो automatic disallowances हो रहा था तो इसलिए उसका आप एक रेस्क्यू रिपोर्ट ये निकाला क्योंकि 3CD assessee has to sign, वो साइन ही नहीं करेगा and you need to verify. तो if under your verification you have seen कि ठीक है 40A3 आइटम आ रहा था पर ये रिपोर्टेड नहीं और कर रहा है assessee, तो उसको फिर आप अपना 3CA 3CB में कर दो. So it will be a win-win situation, nobody would be at loss. Then कुछ basic notes we must give that the information details given in 3CD are as per the books maintained and information compiled and furnished by the assessee. So it is not the information by us. We have taken that information and we have broadly reviewed the basis of compiling these details and we have test checked whether the correct information has been reported or not. We have verified the process. So our role is not to feed things in 3CD. Our role is to verify whether the details of 3CD given by the assessee are correct or not, and therefore it becomes mandatory. Our guidance note also says that 3CD must be signed by the assessee first and then by the auditor. So this was also one of the question which was posed to me by Sharadji. So a tax audit report form number 3CD must be signed by the assessee first, and these notes must be given with the 3CD and form number 3CB or 3CA. Then applicability as regard is considered. This is a very hot issue right now. We know that 1 crore limit is there, then 1 crore to 2 crore 44 AD limit is there. Then there is a limit from 1 crore to 5 crore. If you have 95% receipts and payments, otherwise then not otherwise than account pay check, then you are not required to get your accounts audited. Now see the kind of ironical things which are getting here. If your turnover is up to 1 crore and 44 AD is opted, if you are offering more than 8% profit or 6%, no problems, no audit requirement. If it is more than 1 crore and up to 2 crore rupees, so up to 2 crore you can take the benefit of tax audit, but then you will be subjected to this 5% criteria also, and from this 1 crore to 2 crore still 8% 6% is required. But if your turnover is, say, suppose 3 crore, which is more than this 2 crore and less than 5 crore, so then you only need to ensure that 95% receipt and payment are, if through account pay check, there is no requirement of 8% or 6% anywhere. You are not required to get your accounts audited. It is very clear that if your turnover is up to 2 crore, there is a requirement of 8%. But if your turnover is more than 2 crore, there is no such requirement. So assessees may increase their turnover this year if at all they fall under this 95% criteria. This 95% is all the receipts and payments. It is not income and expenditure. So if there are some capital receipts also, if any loan has been taken in cash also, or loan is given in cash, then also you may not be eligible for this 95%. So it is 95% of the receipts and payments which is important. All the third party receipt and payment, whether it is income expenditure or not, this 95% is required to decide whether tax audit is to be done or not. Then clause number 3, as I had mentioned earlier, this is an observation of tax audit quality review board. What they have found that the address mentioned in annual report and the address which is reflected on the website of Ministry of Corporate Affairs MCA website and the address mentioned in tax audit report 3CA 3CB is different. So this should not happen. Our guidance note says that both addresses should be same, and this kind of errors, if are being done at any place, should be avoided, and we should ensure that the address in annual report MCA and our tax audit report is same. Then moving ahead to nature of business and profession, tax audit quality review board has also observed that information is being given only of one business. If I am having suppose multiple businesses, so I need to give the information about all the main activities. I am doing a trading, I am doing a service provider also. So we need to report about all the activities, main activities which are being done. It is not sufficient if we only report one. So all the main activities are required to be reported and actually are not being reported, as is found by the tax audit quality review board in their presentation. Then one very important thing, where are the books of accounts kept? List of books of accounts maintained and the address at which such books are kept is very important consideration. Why? Because if an income tax survey is to be done, it can only be done at the business premises. We all know that. Now, what is a business premise? So our act also considered wherever books of accounts are kept will be considered as your business place. It will be place of business. So if you are mentioning your residential address that I am keeping books of accounts there, अभी एक आयरनिकल चीज आपको बताऊं कि कई बार एक असेसी के यहाँ सर्वे हुआ, उस असेसी से पूछा कि तेरी बुक्स ऑफ अकाउंट्स कहाँ है, उसके यहाँ ऑडिट होना था तो उसने बोलिया मेरे सीए साहब के यहाँ पर है, तो उसके ऑडिटर के यहाँ भी सर्वे हो गया क्योंकि बुक्स ऑफ अकाउंट्स वर केप्ट एट द प्लेस ऑफ द ऑडिटर. सो प्लीज एंश्योर हमारे पास में कोई बुक्स ऑफ अकाउंट नहीं होना चाहिए क्लाइंट का. जैसे ही ऑडिट हुआ उसको उसका बुक्स ऑफ अकाउंट वापस देके ऑडिट कर लिया, डिलीट कर दो, हमारा सिस्टम्स में किसी का भी कोई भी डेटा हम संभाल के ना रखें। क्लाइंट का डेटा है, क्लाइंट संभाल के रखे। वी शुड नॉट कीप एनी डेटा बुक्स ऑफ अकाउंट एट आवर ऑफिसेज, बिकॉज कहीं पर भी जहाँ क्लाइंट का, जिस भी क्लाइंट का डेटा मिला तो वो उसका प्लेस ऑफ बिजनेस एक्ट में डीम कर लिया जाता है और वहां पर सर्वे किया जा सकता है। सो दिस इज वेरी इंपॉर्टेंट। और बुक्स ऑफ अकाउंट कहाँ कहाँ रखा है ये हमें कैसे मालूम पड़ेगा? तो वी शुड ऑलवेज ऑब्टेन अ मैनेजमेंट रिप्रेजेंटेशन एंड क्रॉस चेक विद द कंपनीज एक्ट ऑल्सो। कई स्टैट्यूटरी रजिस्टर्स हैं, कई सारे डॉक्यूमेंट्स हैं, वो रजिस्टर्ड ऑफिस पे रहते हैं, तो वेदर इट इज द सेम एड्रेस और नॉट। देन list of books of accounts maintained and the address at which they are maintained. So we should, इसमें कई बार क्या होता है, now computerized books are maintained, but still this is not being mentioned. So we should ensure that wherever it is mentioned that computerized are there, we should specify that the same are maintained on ERP system or following software. Then moving ahead, now 11C is very important. This is also an observation of Tax Audit Quality Review Board, that the audit report asks you all relevant documents examined. So now what is observed, that our guidance note requires us to verify invoices, receipts, vouchers, bills, secretarial information, confirmation, certificate, internal, external evidences, all have to be verified, and we in fact verify them, but we do not mention it here. So what is the finding of Tax Audit Quality Review Board? That all these documents which are referred are not mentioned to be examined. So we need to mention that they all have been examined. Then only we will be complying with the guidance note, and this will show that okay, we have seen all these documents. So this is also very important. We should ensure that invoices, receipts, all the documents which we see should be mentioned here. Then upcoming to clause number 13, method of accounting. Please be clear that there are only two methods of accounting, cash or mercantile. An assessee may shift to cash to mercantile, mercantile to cash. That is no problem. There is no prior approval required. Now, there are some judicial decisions which say that for a different source of income, a different method of accounting can be followed. But I would suggest that since the Act does not allow us, it only allows us to select either of them. So we should follow a single method of accounting. If assessee is following, for example, in certain public sector undertakings, we have seen if we are doing audit of a PSU, in PSU, certain items of income are recorded on cash basis, and mainly they are recording it on accrual basis on the basis of mercantile. So if this kind of deviation is there, we should mention it in the notes to account specifically. Then moving ahead, one more aspect is being seen, that assessee may change its accounting policies. For example, LIFO was followed, we shift from LIFO to FIFO, or FIFO to weighted average because of some software. So when these kind of changes are being done, the question in 13B, it asks whether there is a change in method of accounting. If yes, please mention. So give the effect on profit and loss account, blah, blah, blah. So change in accounting policy is nowhere to be reported in the tax audit report. Please be clear, it is the method of accounting only. So many places where we see that a change in accounting policy is also reported in tax audit report, specifically in clause 13, that should not be done, because the question is very clear. It is only asking about method of accounting, and methods are only cash and mercantile. Accounting policy change will not qualify under this aspect. Then moving ahead to clause number 14. This is method of valuation of clothing stock. Please be clear now that now the Act is amendment. You could earlier value it at cost or at NRV, but now nothing doing. It has to be valued at lower of cost and NRV. It is not or NRV. Many places we say, or in common parlance, casually we say, we have valued the inventory at lower of cost or NRV. It is not cost or NRV, it is cost and NRV. Interestingly, there is a presentation of institute, common mistakes in financial statement, and this aspect is highlighted, that members are writing lower of cost or NRV, which is incorrect. It should be clearly mentioned cost and NRV. Then if there is a change in accounting policy, our ICDS definitely says that it can be changed if there is a reasonable clause. So now since the act is amended, it can be valued only at lower of cost and net realizable value. So if something like this is there, we should report it in the notes to account. We should mention there that this kind of accounting policy is changed. So valuation is to be done only on lower of cost and NRV. Any member who is being writing like this must ensure that we do not report or write this line. These 3 lines, that inventory has been accepted as certified by the management, is a blunder. It is a criminal error, because our standards on auditing do not permit us to give a clean report when we are writing this line. Why? Our standards on auditing clearly state that every material item of balance sheet must be verified. For every material asset item of the balance sheet, we should ensure 2 things: existence of that asset, that yes, this inventory was there, I have done its physical verification, and secondly, it is in a saleable condition. It is not in a deteriorated condition. It is not in an obsolescent condition. We should ensure the existence and the condition of that asset. So writing of these lines is a professional misconduct. You have not done your audit as per the standards of auditing. This is also one very important aspect which is under the consideration of our institute. Our institute has seen this error in many cases. So these 3 lines, anybody has been writing, please remove it. Then what to do? See, I have already mentioned that we have to verify. So you take an inventory list on the year and date. You ask the assessee to do a shortage excess audit. You have to see if there is a shortage excess. You have to make the adjustments. What also can be done is, after you have verified these things, you can cross check it with the purchase and sale for the April to June of the next year. If all the items which were in the stock have been sold in the next 3 months, then we have no issues. Because see, inventory is a very crucial item. Many times it is inflated, it may not be inflated. So when we are doing audit, what you can see is, okay, this is your inventory, this is your item, this is the value of that inventory. You see the cost of goods sold for the next 3 months. If in next 3 months it has been sold, then well and good. If it is not sold, please see if it is obsolete inventory, if it is not sold for next 3 months. So that means there is some problem with this. So these are some cross checks with which we can see. So physical verification is must. If at all we are not able to do the physical verification, we have to adopt this alternate procedure, like next 3 months sales we have verified, we have taken a representation from the client, but alternative procedures have to be adopted. We cannot merely write the inventory has been accepted as certified by the management. Especially for this year, nobody could go on 31st March for stock taking. So an illustrative note is given by me that the inventory other than stock lying with third party has been physically verified by the management during the year. Full verification by us could not be done due to COVID-19. However, alternate audit procedures were applied for verifying physical presence of the balance inventory. There could be video calls. There are various alternative procedures which can be done, but we cannot simply write, yes, we have verified. If you say so, and if you have signed the balance sheet in April or May, the first question will be, where was your COVID-19 pass? How you could go to the unit and verify? Because if we are writing like this, yes, we have verified, if we do not give any disclaimer, the simple question will be, okay, you have yourself verified. It is not the management who have done the verification. It is you who has verified it. So please prove how you have verified. And then you see that it was verified by the management. Then you will be under fault because you have not given that disclaimer, or you have not specified, reported that this was a limitation in physical verification of inventory, and therefore alternate procedures were adopted. So this is very important. Because of inventory, hardly anyone could have done physical verification. Alternatively, if after the lockdown you have done the physical verification and then you do reverse engineering of reducing the sales and purchasing and see that yes, this was the inventory, fine, that is also acceptable. Or if there is no sale after in COVID period, then also that is a different thing. But this kind of note is required to be given in this year. Then moving ahead to some other clauses also. Clause 17, for example, 50 CA and 43 CA. Now 50 CA and 43 CA are important. Here reporting is to be done for all the items which are immovable property. Immovable property, if it is sold for a value which is lower than the stamp duty circle rate guideline value. So this is important. Now you will, some people are asking, okay, it only requires to give you for the stock in trade and not capital asset, because tax audit is of the books of accounts for the business. And if it is not a business asset, it is a capital asset, we are not required to give the details. No, it is not so. Our guidance note also clarifies that you need to report even capital assets, capital items, if it an immovable property which is held as a capital asset is sold at a stamp lower than stamp duty value, then you are required to report under clause number 17. There can be one situation, if there is a individual and that individual holds the property in personal capacity and does not inform us he has sold it, it was not in his the business books of account. So for proprietors, our guidance note gives the option, an individual proprietor, if he maintains books only for business, in those cases we are not required to give the details of assets sold below stamp duty value in his personal capacity, because the assessee has not provided the details to us. But if it is a case of other than company, other than individual, be it a company firm, in those cases there cannot be something a personal balance sheet. So in those cases 100% reporting is required. In case of proprietor of a business who is an individual, this stand can be taken. Then how to verify it? So there, as I have already said, there is an audit checklist. You need to see from 26 years if any TDS under 194 IA is deducted. You check the fixed asset ledger and investment in immovable property account, your fixed assets ledger. You need to see the registered copy of the deed with the pauti which has the market value, stamp duty value certified. You also obtain a management representation in this respect. So all these aspects are very important. Then moving ahead to clause number 18, which deals with fixed asset schedule. Now this is very important. You need to see that first of all it is seen that when an audit of company is being done, normally the additions in case of the company and the addition in case of a tax audit report both should match. And in while doing the tax audit quality review board, it is seen that the additions are not matching. Okay, additions will reflect the purchase cost of any asset, so it has to be same whether it is for tax audit purposes or it is for schedule 3 balance sheet. The rates may be different, useful life may be different, but the addition amount will definitely match. So if it is not matching, there is some error, we need to cross check it. And it is observed by the institute also that this mistake is happening in many cases. In case of deletions also, you can see what you can do in case of Companies Act, whatever is the value of your profit or loss on sale of asset and the amount of WDV reduced, you total them, and this total figure, for example, the WDV was rupees 1 lakh. My profit and loss on sale of asset is rupees 50,000. The book WDV which is reduced is 1 lakh. My profit and loss on profit on sale of asset is say 50,000. So 1,50,000 will be the amount of deletion in the schedule, in the tax audit report schedule, clause number 18. So books of accounts, amount reduced from WDV and profit on sale of asset to be added. This will definitely be cross matched with the fixed asset schedule, clause number 18. So this is important. Maximum rate of depreciation 40%. For motor vehicles, there is a change. It is 45% is allowed. This is fine. Now, one more important thing, we need to give a note that this, what is the depreciation, correct depreciation is being given by the management, and we have broadly reviewed the process of allowing at this rate, because classification is important, rate is important. So many considerations are involved. So this kind of note must be given. I'll circulate my presentation so you can refer to these notes also later. One important thing, that depreciation on intangibles is now allowed even on goodwill. From amalgamation, depreciation is allowable as per Supreme Court decision. Skill, know-how, brand name, non-compete, marketing, commercial right. Depreciation is allowable on all these intangibles at the rate of 25%. We all must be aware. Now, one query which was posed to me by Sharadji: if a car is registered in the partner's name, what to do? See what happens. Many times the entity's partnership firm is not considered as a separate legal entity. So you cannot register the vehicle in the name of firm, and therefore it is registered in the name of a partner, and the whole amount is paid by the firm. What would happen in this case? I will take you to the decision to section 14 of Indian Partnership Act 1932, which says wherever a partnership firm has paid something and the asset stands in the name of partner, the asset will be beneficially legally owned by the firm only. And it is not, because the firm is not a legal entity. Still, if firm is making payment for something and if the asset is held in the name of partner, the asset will be owned by the firm. So in those cases, we can definitely claim depreciation, because it is not possible in case of partnership firms to hold the asset in the name of a partner. I have cited some decisions also in this case, which are in the favor of the assessee. Then depreciation on individual assets. One more important aspect: if it is a company and if an asset is in the name of director, then there may be some issue with this. There are some favorable decisions, but there are some against decisions also. So in case if it is a company, the asset should be held in the name of company, there is no issue. But for partnership, if it is in the name of partner, that is fine, there should not be any issue. Then, if an asset was already in the block, if you have purchased it, it forms part of the block, and later on the plant was shut down for 6 months or for the whole year, no problem. It is not. See, there are two conditions for depreciation: ownership and use. Ownership, it should be a beneficial ownership, as we have discussed. So even if the asset is in the name of partner but beneficially owned by the firm, fine. Use it would include active and passive use both. Once the asset falls into the block, it loses its identity, and then if the block is there, there will be passive depreciation. So even if the plant is shut down, it is not used actively, still depreciation will be eligible. Swati synthetic decision is there, GR shipping, your Bombay jurisdictional high court is there. There are many decisions. So even if the factory is shut down for a period, you will still be entitled to claim the depreciation. Then, one very interesting change. We all know that accounting standard is now changed. Accounting standard 10, property, plant and equipment, is there against fixed assets. Now this accounting standard interestingly says wherever there is a machinery spare which is consumed, it has to be now capitalized. Earlier it was written off as repairs and maintenance, but now it has to be capitalized as per the new accounting standard 10. But ICDS 5 is as per old accounting standard, which says you write it off. So what would happen in this case? For your company's books of accounts, for your books of accounts, the capitalization is more. So you are having a higher profit as per books of accounts. But for income tax, you are paying tax on a lower amount, lower tax, and this will be a timing difference, and therefore deferred tax liability will be created. In income tax, your profit will be less. In books of account, profit will be more. Why more? Because you have capitalized the repair and maintenance expense of source consumption. And in income tax, you are charging it off as repairs and maintenance. So this is interesting change, and this is an item where the promoter will be definitely happy that you increase my profit for company purposes, and for the purpose of income tax, I am paying on a lesser amount. Then important clause number 20B, which deals with employees' contribution to PF. We all know that this employees' contribution to PF, now there are plethora of decisions which say, except Gujarat and Andhra Pradesh, and I believe Telangana High Court, which say that this has to be paid by the respective due date. Otherwise, all the high courts across the country, one landmark decision being Emil Limited Delhi High Court, it says that if it is paid by the due date of filing of return of income, the same is not to be earned under section 224(10). It is not an income. There is no addition to be made. But now, unfortunately, the clause does not ask us whether it is whether it is disallowable or not. It simply asks us the delay. So we are reporting it. Now, interestingly, there was a conference with the CPC, and CPC in their seminar have stated that okay, so due date is the issue. So why don't you write the due date of the? It asks you, if you see the fourth column here, due date for payment and actual date for payment. So due date for payment, instead of that 36.5A, CPC said, why don't you write the due date of filing of return of year? Now, I personally do not agree with this, because due date of payment here is the respective due date only, but due date of filing of return cannot be taken. So our guidance note also says that due date of actual due date of payment should be respective due date only. So there is no way just to contest the disallowance which is being made under 143(1) because of this clause. This is a major cause of litigation, and I have also come across certain internal instructions of the CBDT, which says that no appeal should be filed because this is a settled issue and blah blah blah. So therefore, in cases where this kind of disallowance is being made, we should definitely represent from all these representations to the board that CPC should not make this disallowance, or if made, we can definitely file an appeal against this. Then, coming to one of the most important clause of the tax audit report, that is clause number 21A, which asks us about the capital, personal, advertisement, club expenditure, penalty, fine, blah, blah, blah. Now, if you see capital versus revenue, so the definition of capital and revenue is changing day by day. Supreme Court in Empire Jude 121 ITR had said that any expenditure which is which brings benefit of enduring nature is capital. Now, see the type of changes which are coming. One mobile which my father is using, he's using it from last 3 years, and I am changing my mobile every 6 months. So mobile for my father is a capital expenditure, and for me it is a revenue expenditure because it is not even lasting for a year. So these are very important changes in technology. With the change in technology, we should definitely assess whether it is capital or revenue. So one more interesting thing, there are some authorities decision which say that if you make some expenditure on a leased rental premises, it can never be owned by you and it has to be charged off. That is revenue, it is not capital. If there is a replacement, that is definitely a capital revenue expenditure. Replacement is not capital. So what is capital or revenue has to be seen every time from a assessee's perspective also, and we need to be very this is an aspect which involves a very important professional judgment. There are some decisions I have cited, like for example, cost of waterproofing, roof area, renovation, replacement, reconstruction of road, repairs to boundary wall, etc., are not being considered as capital expenditure. Then personal expenditure, where will you find personal expenditure? So I have highlighted some ledger accounts in which personal expenditure can be done. One very important aspect which I have seen is credit card payments. Where there is a credit card payment in gifts and presentations or sales promotion, you see those credit card payment. In the bill you may found something कि भाभी जी के लिए कुछ शॉपिंग करी और वो क्रेडिट कार्ड से पेमेंट किया है बिल का. Some personal expenses may be seen there. So for verification of personal expenses, this credit card payments is important. And always cross-check if you are reporting something here, it should also be reported in Caro, or it should not be reported at both the places. So these are very important aspects. Also, if any disallowance is made in an assessment for personal expenses, please make an office note in your document file that no appeal is filed considering the meager to buy piece and the amount considering the amount, but we do not agree with that assessment disallowance of personal in nature, and we do not have any personal expenses. Then some notes also should be given on the limitations to verify these kind of things. penalty, fine, etc. We all know that any penalty, fine for breaking the law, infraction of law is not applicable. But if it is a contractual break, and if we are paying fine for contractual breach, that is allowable. If it is a compensatory payment, for example, interest on sales tax, interest on GST, late fees paid in GST, all these are compensatory in nature, and therefore they are not covered under fine, penalty, and must be allowable. One question: GST late fees, whether it is allowable or not? Yes, definitely it is not a fine, penalty, it is a compensatory expenditure. It is in the nature of compensatory payment, and therefore it is allowable expenditure. It is not item to be reportable under 21A. Then one interesting aspect is interest on TDS. You have paid the TDS late. What would happen in those cases? That is very important. So now there are divergent views. There was a decision of Ahmedabad Tribunal in Royal Packaging which said, nay, interest on tax is different and TDS is a third party payment. So late payment on payment of TDS is allowable. Then came the decision of Narayani Ispat, which was a landmark decision. Then Sai Food Products, which is Calcutta, Rumta Mines, Calcutta, Ma Annapurna Transport, Calcutta Tribunal decided in the year 2020 itself. Even Mumbai Tribunal, which is your jurisdictional tribunal for Thane people, has decided in 2018 that this is allowable. Interest on late payment of TDS is not disallowable expenditure. However, recently in June 2020, Ahmedabad Tribunal has taken a different view. The same author in Narayani Ispat and is the author of the against decision in MMR, who is relying on a Chennai properties decision of Madras High Court and decided the issue against the assessee. So with this kind of things, I would suggest that we may take a conservative view only always, and this interest on late payment deposit of TDS may be considered as disallowable. If not, if the assessee is relying on some legal view, then these decisions and the legal view taken may be kept on document, and we can report the same, that the assessee is not considering interest on late payment of TDS as disallowable based on legal views in the 3CA or 3CB report. We should mention it there itself. Then penalty, fine, we have discussed that penalty fine breaking the law is required to be reported here, and this kind of notes may be given. TDS disallowances, if non-deduction is there, or if after deduction non-deposit is there, both are calling for disallowance. Now, if the party for which we have not deducted TDS has offered it to income, and before our audit date submits the report of another chartered accountant in form 26A, that the income on which TDS was not deducted has been offered to tax and the tax along with interest is paid. In those cases, no issues, no disallowance can be made. We are not required to report, but before the date of signing of audit report, we must have that form number 26A in our hand, which is sometimes difficult. In case of NBFC interest, this is a very important consideration. So please ensure that this 26A is there. Otherwise, you need to report it under 40 IA. There is a case of Chandubai Jassubai, Bombay Tribunal itself, where it is held that if there is a short deduction, that is not disallowable under 40 IA, only non-deduction is disallowable. This is a court view, but we may not fully agree with it. And for audit perspective, we need to be conservative. Then these are the reporting format for tax audit. This is a general note which can be given by us in the tax audit report. Yes. Now, there is one important aspect which our institute has noted. See, when we report the details in tax audit report, it asks us the total expenditure on which tax was required to be deducted, and expenditure on which it is deducted. See, this is the format. If you see section, for example, advertisement, if we consider, I mentioned 194C, nature of payment, advertisement, total amount of payment. Now in my PNL, I have paid rupees 5,15,000 as advertisement, and 15,000 I have made payment to a person on whom TDS was not applicable. Remaining 5 lakh I have made. So in column number 5, total amount on which TDS was required to be made, I mentioned it 5 lakh, And in 4, I should mention 5,15,000. But what is being done by all our offices is that in column number 4 also we are mentioning 5 lakh on which TDS was required to be deducted, 5 also 5 lakh, and total amount on which it is deducted is also 5 lakh, and the amount of TDS deducted. So please remember, to clause number 4, the amount mentioned, nature of amount should match with the financial statements normally, which is not mentioning in many cases. And this has been a finding on which some notices have been issued by the institute under Tax Audit Quality Review Board. So this is very important consideration, please note. Then foreign remittances are there. This is very important because foreign remittances, TDS is not being made many times. People are making payment from credit card. So if it is not done, there is a penalty under 271I for 1 lakh rupees. And definitely 15 CACB must be obtained, and assessee if not taking it, that is a basically default. And we should insist on that this kind of certificate should be taken by the assessee. Then clause 34A, as we have mentioned TDS, we should specify some notes. I have given some illustrative notes which you can see. These are also mentioned in our guidance note. 40A3 new limit is 10,000 rupees only, cash payments. Biggest problem which is coming is that genuine payments made to electricity company or some stamp duty vendors, etc. So in those cases, if it is not considered as disallowable, and if his assessee is not agreeing to report it under clause number 21D, you may report it with a suitable note in form number 3C or 3CB, that during the year under consideration, the assessee has made payment of rupees 15,000 to the Maharashtra Electricity Board, Maharashtra State, whatever may be the company name, electricity company name, and which has not been considered as disallowable by the assessee, being a government company, though not government. Based on certain legal views, you can refer these decisions, and you need to mention it in 3CB or 3CA if the assessee does not agree for reporting in 40A3. Please keep in mind, it is a consistent stand that tax audit report 3CD is the assessee's baby. So if the assessee agrees us to report, definitely report it. But if it does not agree, then the alternative procedure is to report under 3CA or 3CB. These are kind of notes which I have referred to. You may refer to it for reporting. Then, what is the difference between these two checks? Please note very carefully, the above check is account pay check and second one is merely cross check. The second check does not qualify for 40A3 or 269 SST. There is a decision of Gujarat High Court in Rajmoti Industries which says that a cross check is violative of 40A3 and not allowable. A cross check can be endorsed to many persons, so therefore cross check is not to be considered, and cross check is definitely disallowable thing. So please ensure that it is account pay check only. Then 14A, now if there is no exempt income, no disallowance under 14A is required by way of the amendments and dividend income being taxable, this has become teethless. This is important, 3613. You have taken some borrowed funds and you give some interest-free loans to your sister undertaking. What would happen? See, you need to apply Bombay High Court decision Reliance Utilities test, whether your own funds, own capital is enough to meet out this interest-free loans or not. If yes, then no disallowance. If no, then the interest which you are paying for non-business use, because the borrowing have been utilized for giving interest-free loans and not for your regular business, and therefore that will be disallowed under 3613. So you need to see, but if you have enough adequate own funds, your capital is 50 lakh and you have just given 10 lakh rupees loan, then it will be assumed that this 10 lakh loan is given out of your own funds and no disallowance will be called for. So Reliance Utilities is a wonderful decision, Bombay High Court 313 ITR 380 if I recall. Then Supreme Court decision SA Builders is also very relevant in this clause number 21I 3613 is concerned. Then 48 to be relative payment. This is very important. Institute has observed that at many places name is mentioned, but PAN number of the related persons are not mentioned. How will we come to know who is relevant or not? So Mr. Manilal Shah is asking question, one-to-one matching is not relevant. Yes, one-to-one matching is not relevant. You can refer to this Reliance Utilities decision. And later there was a decision in case of Orbitec, which was authored by tribunal member N.V. Vasudevan. He has clearly written in the tribunal order that after Bombay High Court Reliance Utilities, the one-to-one cash flow test is of no use, and Reliance Utilities own funds versus this criteria has to be applied. So that is a clear case, sir. 48(2)B, if you are making payment to relative, it has to be seen whether the payment is nowhere you are not required to report whether it is disallowable or not. You only need to report whether it is a relative payment and what is the payment. That is it. Related party, one very important consideration is now domestic transfer pricing is again back. 115BAB requires, if you have opted, if you have made a company after 1st October 2019 and you are opting for that 17% regime, you have to see that you are not doing any related party transaction. If are being done, 3CEB has to be made and there has to be a domestic transfer pricing audit. So if a related party reporting is being done, then irrespective of the transactions, if 115BAB company is there, there is a additional requirement of a domestic transfer pricing audit which may be noted. This is very, very important. Then 41(1) amounts, if there are aging analysis is done and there are creditors outstanding for 3 years, no problem, still they are not disallowable. But you need to see, you need to pose it to the assessee whether it is payable or not. If he does not consider it payable, better to write it back. But unless you write it back, the assessee writes it back, no disallowance can be reported under 41(1) of the clause 20 number 25. Then now percentage of yield and quantitative records have to be given because you are giving it under GST. You have to give it here. You cannot escape from your responsibility to report it, or else if you have not done, you have to qualify. Our institute has categorically mentioned in the tax audit quality review that if you are not reporting it, then report it under as a qualification. You cannot simply escape it. You can give a note that not provided to us. You have to qualify your 3CD because of this. Then clause number 2643B item, we all are aware about 43B item. One new item has been added. This is the interest on loan paid or payable to NBFC is also now 43B item. Conversion of interest into loan is not a payment and it is still disallowable. We need to obtain interest certificate from bank and should document the challan copies with us to ensure that yes, it has been paid. Clause 21 is dealing with prior period income expenditure. Prior period for income tax is those expenditure which have been actually paid or not, actually crystallized or not. Crystallization is important. So prior period for our accounting standard is the wider definition, but for income tax, the crystallization is more important. So you may take some views and on that basis, you may decide whether it is disallowable or not. If it is a cash system of accounting, this is not relevant consideration. Then this is a note which you can mention while reporting the prior period items. 5627B, new issue of shares. Definitely you need to take a valuation report. So wherever you see if new shares have been issued, please take a report from your another professional brother. You cannot do the valuation. And if your brother is doing, we can create professional opportunities because of this clause. So 5627B, unless you have the valuation report, you cannot report that this is undervalued or overvalued. So this is very important clause. Then 269ST, we all know that SIT had recommended 3 lakh, but now the law has come for 2 lakhs. I'll explain this 269ST with an example. If in a single day, you are receiving payment from one person against 3 bills. See, there are 3 bills. So you cannot receive more than 199,999 in cash. You may receive 3 bills, 80,000, 80,000, 80,000. three bills, 8,324, 2,40,000 you have received bills, and you are receiving payment against these three bills from one person. So from one person in single day, you cannot receive 199,999. So this is first clause. Second, one bill, you cannot receive 199,999 against one bill from many persons in many days. See, many days in a calendar and many persons are here. So against one bill, you cannot receive 199,999 or more. So this is interesting thing. Third is on one occasion, from one person on one occasion against many bills, you cannot receive in many days more than 1,99,999. It is not 2 lakh. So this 269 ST is very important. Please keep in mind, this is also to be reported now. 269 ST, SS and ST, one common error which we have seen. I have taken a loan during the year, then only I have to report. If it is opening and closing balance, only interest is getting added, no reporting. I have taken a loan of 1 lakh rupees. Or for example, if during the year I have not taken a loan, I already have a loan of 1 lakh, and during the year there is an interest credited of 10,000 on that loan, that is not to be reported under 269 SS. But out of that 10,000 interest, if I am paying suppose 500 rupees also, so that payment has to be reported under 269 T. Now 269 ST, we have already reported discussed. This is the reporting format for it. This is the basic clause which is there. One amendment, very interesting, 269 SS includes any specified sum, which specified sum includes any advance. So booking advance from builder is also covered. Now, if you receive from a builder receives booking advance from 100 people against whom registry is also being done, still total sales of that builder has to be reported under this clause number 31 in 269 SS, which will be a Herculean task. So I suggest that you should also represent to the CBDT, and our institute should also come out with some guidance that at least for builder, only those reporting should be done where registry is not done against the specified sum booking advance received, or where the booking is cancelled. So this is very important. Mr. Manilal Shah is saying, can you repeat 269 ST? Yes. In 269 ST, I have discussed these three clauses. 269, see 269 SS, loan or advance taken. 269 T, loan or advance repaid. 269 SS, loan or advance taken during the year, only considered interest credited, not to be reported. 269 T, if even repayment of interest is being done, to be reported. 269 ST, 269 ST, these three items, if amount is received on the credit sales, see, if you are talking about credit sales, these are three instances of credit sales. Single day, three invoices, this is a credit sale. If you receive the payment in cash on the same day, if it is cash sales, 269 ST will be there. If it is a credit sale, single base is raised, this was a credit sale, A, B, C, D, four people are making payment for that sale in cash in many days. If the bill is more than 2 lakh rupees, if it is for 2,40,000, and if you receive in many days from many persons this 2,40,000 in cash, say 10,000 every day, still the penalty will be applicable, and this is required to be reported. So this is the example of credit sale of single bill received from many persons in many days. Reporting is required to be made under 269 ST. Now we also should keep in mind 271J, that if any reporting error is made by our member, CIT appeal, the AO or CIT appeal can levy penalty under 271J, and this is very important because if a penalty is levied under 271J, the penalty is mere 10,000 rupees per report, but this disqualifies you to become a registered valuer under Security Financial Asset IBBI for 5 years. So this kind of penalty may have wide ramification in other statutes also. So kindly note this. Then some important aspects of ICDS. My time has just finished, but I'll cover some important aspects. Mark to market losses are not allowable on derivative. If it is on monetary items, it is allowable. If it is non-monetary items, these are not allowable expenditure. So for accounting standard, it may be allowed, but for ICDS will get it disallowed. Then change in accounting policy, ICDS requires to report it in the year in which it is changed and also in the year in which there is an impact of that change. इस साल मैंने अकाउंटिंग पॉलिसी चेंज करी और 2 साल बाद उसका इम्पैक्ट आ रहा है, तो मुझे इस साल भी रिपोर्ट करना है, 2 साल बाद भी रिपोर्ट करना है. Government grant, if it is foreign depreciable asset, so reduce it from that asset, otherwise take it to P&L as income. Now there is nothing like capital grant. All grants are taxable, either if it is for asset, then reduce it from the cost of asset or offer it to P&L. Nothing, no other option. Then one very important thing, rule 114B of income tax rules. So sale or purchase made by any person which is more than 2 lakh per transaction, then you need to give your pen to him and you need to take his pen also and obtain it in your record. This is now a very important, whether it is a credit sale also. I am dealing with a person and I have purchased rupees, a good for rupees 3 lakh rupees. So I need to take his pen and give him my pen. This is now required under rule 114B. So this was important. So I believe I have tried to cover all the important aspects of this tax audit clause by clause analysis. So now thank you very much for such a patient hearing. Yes, one last aspect which I'll cover. There is a minor change in the tax audit format. There is new serial number 8A, which requires you whether you are opting for 115A, BA or BAB, which is concessional rates. And if you are doing so, there are consequential reportings of the WDV of asset and brought forward losses also. So this was all about today's session. Thank you very much for such a patient hearing. Now the dais is all yours for the query session for next 20 minutes. Thank you.
Thanks, Pankaj ji, for your explicit covering the issues on tax audit and explaining us clause by clause the tax audit report. There are some queries raised. The first query is, if SSC could not pay GST and the accountant reported in audit report, but in P&L account GST amount not claimed in this regard, will the GST will be added in the profit?
If the assessee is not claiming it, see, there are two things. Section 145 now says that you need to include it all, but still our guidance note says that if we are making it separate, if we are not claiming, then we are not required to include it in our turnover.
The second query is, in 269 SS and T from financial year 2017-18, the word specified sum is introduced.
Yes.
So is it mandatory to fill 269 SS and T in case of development of plot business, because there are huge number of advances given for
I have already covered this problem in my presentation also. Yes.
And the other one is that, sir, in some business, in manufacturing business, there are huge number of raw materials and various like screws, paints and all these things in manufacturing, like say machineries. Yes. How is it possible to give a quantitative details?
See, it requires, if you read the clause and our guidance note is clearly specified, only principal items are to be reported. So you need not report this immaterial items.
Okay, sir. Okay. So any other, I think so there are no such queries raised by the members. If there are any queries, the members can ask directly.
Can post on the chat now. We are open to queries.
Hello. Right, sir? No query?
No queries. Even on YouTube, there was one which I already put in, this 269 SS query. शरद भाई ये ले लिया क्या है वो क्रेडिट सेल्स वाला?
हाँ ले लिया ना.
Yes sir.
So I think you can take up the vote of thanks now.
One second. Hello.
हाँ गिरीश.
Pankaj, you said that we should take signature of assessee on 3CD.
Yes, sir.
He is accepting when we upload as a chartered accountant, when we upload it on our portal. He is
Right.
accepting with his digital signature.
Yes,
Voice
sir.
is not clear.
वो उसको बोल सकते हैं it is accepted.
But still, sir, you need to, he will take the hard copy from you, signed copy. So at that time, you must take it. Because see, when it is before any authority or any dispute is created, at that time, this problem will be there. But at that time, you will have to then say that he has approved in the, and you will not have access to his login ID password to show that he has accepted that report. So he will be showing his your signed report to the authorities. So at that time, it is always better to you take his signed copy only.
Unless his acceptance,
Yes.
it will not be fine.
That is true, but that you need to explain to the authorities. So better you take his sign only.
Okay, sir. Okay, thank you.
Okay, Pankaj ji,
Yes, sir.
to add to Girish's query, there may be a case where the dealer may not sign, but we have purview to the thing that they have accepted the report while filing online, and we can keep that printout for our safety also. Is that okay?
Yeah, that is also fine.
So that will solve the limited purpose of our safety.
Right.
That it has been accepted.
Absolutely.
Okay, thank you, Pankaj ji. शरद जी, 2-3 queries आई है इसमें chat में, if you can take it up.
Yes, sir. Sir, the same query one which I had raised before, sir, in future on options, if turnover is more than 1 crore and if there is a loss.
Yeah, if turnover is more than 1 crore and if there is a loss, then definitely you will be required to get your accounts audited.
And the other one which I had raised again, the same is raised by some member, Haresh ji. Can TAR be revised?
Yes, there can see there are two things. Our institute requires you to revise only in 3 conditions. But if there is a trivial error on our part, definitely we should revise for those kind of errors. It should be a factual error and it should be error on our part. Then we can revise. Otherwise, if it is a client wants to change some figure or something like that, then revision is not permitted. If some figure is inadvertently entered, then it can be revised only.
Pankaj ji, to this revision, there's one
Yes,
thing I would like to say. Supposing now the revised audit report schema was uploaded with somewhere in mid of October.
Yes.
Wherein they asked us to put in the option of selection of 115 BA,
Right.
BA, BAA, BAB. So supposing some CA has uploaded a report without putting that option.
Yes.
And now we have to put that option because earlier in the format it was not there. So I have uploaded in the old format. Yeah. So I have uploaded in the old format. So whether I can revise it and put it in the new format, it is required to revise it or no?
I don't think you are, because the income tax department has accepted your report and it is approved. So no need for revision.
Vidyadharji, you can put the query on chat, please.
Vidyadharji has put one query that TDS on professional fees by a public limited company had been deducted on provisions. But while making payment, it had been done at 7.5% instead of 10% because of reduction of rate. Should it be reported for the year 2021?
Yes,
Financial year 2021.
It should be reported because for the later period, I believe, if the deduction was more and you are paying it less, then that is a default.
And the other query is, sir, what is the turnover? What if the turnover is less than 1 crore in FNO and have losses? Whether audit is required?
Better to get it the audit required, though there are contrary views, but it is always better to be on a safer side and you should get the accounts audited.
I think now you can go with the vote of thanks.
I request Mansukh ji to propose a vote of thanks.
Mansukh bhai, you are there?
I think so, Mansukh bhai. Bharat bhai, can you propose a vote of thanks?
Yeah, sure. So, Pankaj ji, it was a pleasure of having you here today. And in fact, while I was hearing you, my office staff was also, online. And in my office group, there were chats coming, sir, Pankaj sir has covered this point, Pankaj sir has covered that point. And yes, it was very, very interesting. So there are a lot of points, even if you're doing audit reports on a regular basis. But once a teacher starts teaching, automatically everybody becomes a student. So yes, it was a pleasure hearing you, sir. Thank you for going clause to clause by clause analysis, and be very spontaneous enough to take all our queries and solving them to our satisfaction. On behalf of all the associations, participating associations, and all the members present, I propose a hearty vote of thanks for sparing your time today on the Saturday evening with us. And yes, it has been truly well spent evening by us with you. Thanks a lot, Pankaj. It was a pleasure being with you today. Thanks a lot.
Thank you.
Over
Thank
to
you all.
sir.
Thank you all the members.
Thank you, friends. Thank you for joining us. Looking forward to your support. The next session most probably will be in mid-December. The details will be announced. Thank you, and